Hey everyone, Alex Mad Scientist here with your Thursday market recap for February 26th, 2026. Today we've got a fascinating split. Strong earnings from REITs and utilities pushing higher, but Nvidia's post-earnings reality check is shaking the AI faithful. Plus some genuinely wild geopolitical moves and an interesting rare earth story brewing. Let's dig in. Starting with the winners, and earnings season is delivering real results. Service Properties Trust reported funds from operations of 17 cents per share in Q4. Universal Health Realty Income Trust posted 85 cents per share in funds from operations. That's solid REIT performance. Whitestone REIT came in with 28 cents per share in FOO, and Safety Insurance Group delivered $1.36 per share in net income. LSB Industries, the Oklahoma-based chemical maker, posted 22 cents per share profit on $165 million in quarterly revenue. The REIT sector is showing real resilience in medical and hospitality real estate right now. Now, here's the plot twist everyone's watching. According to Investopedia, major indexes pulled back after that two-day rally despite Nvidia's blowout results. Bloomberg reports stocks are actually stalling as Nvidia failed to stoke the AI trade the way some were hoping. But the CEO just told Fox Business that AI is going to be everywhere, and the boom is just getting started, which is the kind of conviction play that either validates current valuations or becomes the biggest red flag of the cycle. The market's genuinely uncertain which way this goes. On the pain side, we're seeing real trouble in biotech. CLDX Therapeutics reported a loss of $1.22 per share in Q4, missing Wall Street expectations of a $1 loss. That miss is weighing on the sector. The NASDAQ is down over 2% according to the Economic Times, which is signaling real concern that the AI bubble might be getting ahead of fundamentals. We're also seeing European equities traded as ADRs falling sharply, with Trivago facing headwinds. But here's what really caught my attention on the downside. According to oilprice.com, Perpetua Resources is fighting in what they're calling Trump's secret weapon in the rare earth war. China's locked down rare earth dominance by controlling the critical downstream processing choke point that the West abandoned. But companies like Neocorp Developments are working to break that monopoly. Investors Business Daily reports rare earth stocks focused on yttrium and scandium production are worth watching as aerospace shortages hit due to China's export ban. This isn't weakness. It's structural positioning. Let's talk metals, because this is where the real hedging is happening. Gold is slightly positive as traders navigate U.S. trade uncertainty and Middle East risks, according to the Wall Street Journal. Silver is moderately positive, following that safe haven appetite. Platinum futures are moderately positive as Ivanhoe Mines detailed progress at Kamoa-Kakula in the Democratic Republic of the Congo and the start of Platreef production. Palladium is moderately positive, with researchers telling Bloomberg that longer-term sentiment remains bullish despite short-term pullbacks. Copper and aluminum are both moderately positive as the Wall Street Journal reports Trump is considering new national security tariffs that infrastructure demand stays intact. On energy, the picture's mixed and geopolitically charged. Crude oil settled near $66 a barrel according to Bloomberg after that 6% jump last week on Iran tensions. The U.S. Embassy in Lebanon evacuated dozens of staff as a precaution, showing real regional risk. Natural gas is moderately positive as the Northeast gets snow support, according to the Wall Street Journal. Meanwhile, the Economic Times is reporting U.S. stock market crashes with gold and silver getting mentioned. That's the safe haven rotation happening in real time. Heating oil is moderately positive, and gasoline is mixed as the EIA inventory report weighs on crude. Agriculture shows selective strength. Corn futures are slightly positive on buying opportunity calls. Wheat is moderately negative with limited precipitation forecast for the southern plains. Soybeans are rallying on meal strength and normalized trade flows. Coffee is slightly positive on Keurig Dr. Pepper's pricing power. Cocoa is moderately positive as Mondelez addresses the inflation shock from earlier this year. Now the interesting outliers. Anika Therapeutics detailed Q4 results highlighting hyaluronic acid pipeline progress and commercial growth. Ashford Hospitality Trust reported a $2.45 loss in funds from operations per share, but sentiment's still strongly positive, suggesting the market's pricing recovery momentum. Global Net Lease posted 29 cents per share FOO. Global Medical REIT hit 97 cents per share in funds from operations, all solid on the REIT front. Chesapeake Utilities delivered $1.93 per share profit in Q4, showing utility resilience. Orion Energy Systems is rolling out on-site battery storage and starting deployments at 3 of 10 California sites this quarter. That's real execution on energy storage tailwinds. Meridian Bank is getting attention as a dividend play according to Zacks. Supergroup highlighted record customer activity and profitability gains from its focused geographic strategy. On the short side, Unicure plummeted after FDA Commissioner Marty McCary defended rare disease drug rejections on CNBC. That's regulatory headwind. Fate Therapeutics matched expectations with a 27 cent per share loss. Bicycle Therapeutics is seeing European ADR weakness. The wildcard today gets genuinely interesting. We've got American athletes absolutely dominating Milano Cortina. Jack Hughes emotionally shouted out the Team USA men's and women's hockey teams after their gold medal wins. Ilya Malinin and Elisa Liu are on the entry list for the 2026 Figure Skating World Championships, though Olympic champion Mikhail Shidorov opted out. And according to People.com, the U.S. hockey gold medals are generating serious momentum heading into the rest of the games. Cosmopolitan's even reporting Olympic relationship drama with the athletes. That's how dominant Team USA's performance is right now. For trade opportunities, this setup is NVIDIA validation versus AI bubble concerns. That tension is real. The rare earth names look dislocated given their strategic importance in breaking China's downstream monopoly, and that's a structural tailwind regardless of short-term sentiment. Metals are extending higher on geopolitical hedging demand, which suggests volatility persists. As always, these are observations, not financial advice. Do your own research. Subscribe to MarketGlobe3D and check the globe at MarketGlobe3D.com. It's your 3D visual stock scanner. See you tomorrow.